Is this a management execution story on these two names or something deeper about the U.S. consumer?
There are three things that are driving these strong results that we saw from both retailers. First, it is a strong consumer. The foundations of consumer spending are very solid at this point. Number two, there is a growing chasm between those strong, large, and well-positioned retailers and everybody else. The consumer's being more discerning about who they're choosing to do business with, and that's benefiting retailers like Target and Lowe's. And third, both management teams deserve a lot of credit for seeing a very healthy return on the investments and the strategies they put into place over the last couple of years. In the case of Target, that's investing in digital fulfillment options, remodeling its stores, private brands. And in the case of Lowe's, that's addressing the shortcomings that have long existed at this retailer. And both are seeing very good trends as a result.
So, Mark, I mean, what stands out is it's been a really good quarter, especially for a Target and a Walmart. Is that a reflection of the consumer being more value conscious or just better turnaround efforts and less mall exposure for those stores? How do you explain it?
Yeah, thanks. We think it's the consumer, frankly. We think the consumer is healthy. Our survey that we put out every month or so that has about 600 consumers surveyed shows that it's pretty consistently healthy U.S. consumer spending environment. We look at spending intentions on a go-forward basis, and not only overall, but amongst the largest retailers, Walmart, Target, Costco, even inclusive of Amazon, the consumer wants to spend. And so despite the volatility that you see in the macro environment, it doesn't seem to be having an impact so far. Obviously, nobody can see what's going to happen in the future, and the retailers are all talking about some sort of caution on the future and tariff impacts. But what we can see so far, the consumer is quite healthy.
Mark, if that's true, why are spending intentions so weak, especially out of the UMich numbers?
We see numbers that are actually fairly positive. So our numbers are actually pretty consistent with what the UMich numbers are, and they're still generally more positive than they've been. At least we're not seeing intentions that are getting materially worse. So what we're seeing is that they're fairly constructive, and we're also seeing that probably some help from the biggest retailers continuing to gain share, like what Michael was talking about. Our numbers suggest that the biggest four retailers, about 47% of dollar shares, are accounting for over 80% of growth. So you are also seeing some of the biggest retailers getting incremental share from some of the smaller retailers. We probably think those trends will continue. But you couple that with a broadly healthy consumer environment and the big retailers doing better, and I think you can continue to see those big retailers continue to outperform.
Michael, we're seeing an extraordinary rise in... Michael, sorry, hold on. I have a question for you.
Please go ahead.
We're seeing an extraordinary rise in shares at Target. On the call, they spent a good amount of time talking about their efforts in digital. Specific as well to same-day fulfillment, in-store fulfillment, the efficiencies they're gaining from doing that. Is that something you see as sustainable and perhaps why the stock should be up almost 20% this morning?
Yeah, David, I like your question because it's really all about sustainability from here. And if we dig below the surface of the digital growth, it's a more effective cost to fulfill than other forms of e-commerce. And that drove some stability in the gross margin, actually expansion in the gross margin this quarter. As Target continues to use its stores as fulfillment nodes, that should continue. The question here is, how do they confront other challenges like the tariff situation? And they noted that that's going to really be a 2020 issue. And two, there are categories that they serve that are still challenged. Apparel has a glut of inventory across the sector. Consumer electronics suffers from a lack of newness. And so the fact that they're going to have to navigate that does present some challenge. But what Target has shown for the last several quarters is that they're up to the challenge.
Seems like you guys both kind of missed this move today, Mark, with the $85 price target. Target's up $16, so it surpassed that this morning. Are you a believer now? Would you tell people to buy?
We've been telling people to buy as a trading call, so target price notwithstanding, we've been fairly constructive on the stock into earnings each of the last few quarters now. So it's been pretty consistent, and that foundation of why we've been telling folks to be more aggressive into the quarters, because our spending survey has generally shown those intentions being quite favorable. I think probably the incremental surprise that the surveys can't pick up is that the gross margins and the SG&A leverage the company put up were much more impressive than I think people had expected. And obviously, to Michael's point, given fears out there, especially around the soft lines, the fact that this company is really starting to leverage and perhaps even if you take a step back and look at some of the other big retailers, you're starting to see maybe the investment pacing slow, and that they're starting to see then a bit of leverage as top-line comps remain solid, that perhaps the EBIT margin or EBIT growth expectations that were out there 6 to 12 months ago are a bit light versus where they can be, and these companies can actually continue to grow now at a mid-single-digit rate or more.
Sounds like you guys have to take up your targets. Michael, finally on Lowe's. I mean, Courtney made a really interesting point, which is Lowe's out-comping Home Depot. We haven't really seen that in a while, not used to it. Is it something that continues?
Sarah, that's a good question, and this is the second quarter in a row that Lowe's outcomped Home Depot in the U.S. Now, they coupled that with better gross margin performance than they achieved in the first quarter, leading us to believe that it is more sustainable. They're not just discounting in order to drive those sales. And we think that continues into 2020 and beyond. As we think about the stocks, we're a buyer of Lowe's here. It trades at a similar multiple on next year's earnings to Target, but it should have a faster growth rate and should be better positioned to deal with some of the challenges that are thrown at retailers in the coming quarters. So we like Lowe's at this point.